and this is Vin Shumbry, the president of WOWzer Technologies. I want to talk to you about showing you the money, literally from a profit standpoint today. So show me the money and profit. What does that really mean when you think about it? And the three common mistakes. Profit usually is thought of being, what's left over after you have sold an item. So the very first one is, sales are not profit. Yes, you sold an item. That's fantastic, or a bunch of items. But the question really is did you make any money off it? You think you did, but do you really know? If you don't know, you don't really know your business. So you have to know your business. And the first place to start is you must know what all your costs are associated with any item or items. So there's two variables I want you to think about, is what we call variable costs and fixed costs. A variable cost is actually what does it cost to produce that item? And it can vary from one to the other. That's why it's called variable. All right. So let's say that you are in the fruit business, okay, and you sell apples. Well, an apple is not going to cost the same as an orange. So therefore, you must know what each one's going to cost. Now, are you going to take those apples and oranges and you're going to break them down into pieces as well? Then what is the labor associated with that as well? What does that cost? Okay, that is a variable cost. You have variable labor cost. And then you also have fixed cost, and you could have fixed labor costs. What do you mean by that? Well, the people in the office, right, they don't specifically work on that item. They work in the office, so therefore they contribute to the whole operation. That's a fixed cost. In other words, your accounting department, your administration department, those individuals are on a fixed cost. So a percentage of all the fixed costs, even like rent, if you're renting a building, if you're producing some kind of fruit, you will have that. You'll have machinery as well. So a percentage of that. If you deliver, you have trucks. So you see the difference between a variable and a fixed cost? Those are very important. So you have to add those in. You should also look in your industry and see what other costs you should be thinking about as well that you may be incurring as well, like utilities. What are utilities? Like phone, internet. Those things are fixed costs because they, again, a percentage contribute to that. So that's an example of figuring out what your costs are, because sales are not profit unless you know what it costs. So really the profit is when you have your selling item, whatever that is, your sales price, minus all your costs, fixed and variable. The difference is what your profit really truly is. The second one that I want to talk to you about is a common mistake, is what we call markup is not profit margin. Let's say you had that same item and you're going to sell that unit at $100 and you wanted a 50% profit. So you think markup. So what you do is you mark it up 50%. Well, what's 50% of 100? $50. So you put $50 on your 100, you end up with 150. But the reality is that that's not your profit margin, because profit margin is calculated by you taking the price, which is 150 now, right? You went 100, you added 50%, it's 150. Subtract the 100, the original cost from it, that's $50. You divide that by your selling price, not your cost. That's the mistake that most people make. So when you're calculating profit margin, it is the gain divided by the price, the selling price, not the cost. So in this case, it's 50 divided by 150, which is 33%. I thought you said you want to make 50% profit. Well, you didn't. You only made 33.3. You lost 16.67 under that concept. So then how do you calculate it? Well, the way you calculate it is that you look at it and say, okay, if I want to make a 50% profit margin, okay, you basically have to take the 100 that you started out with and divide by the 50%, which will give you $200. So remember what I said what the formula was? The formula is the selling price minus the cost, the selling price minus the cost gives you what the difference is, right? And then you divide that by the selling price. So in this case, 200 minus 100 is what? $100. Take that 100 divided by the selling price, which is what? 100 divided by 200 is 50%. That is the difference between profit margin and markup, what you divide it by. So be very careful on that. Now, it may seem a little bit confusing because I know I'm mathematically inclined and most of you may not be. So by all means, please reach out to me. I'd be happy to explain it to you. That's what the other recommendation that I would say. I said about 3 errors. I'll even add a 4th one there. Do you actually go and seek somebody out who understands how to calculate these numbers for you so that you can be absolutely sure you're calculating the true profit as opposed to thinking you're calculating the right one? Okay, so that's 2 of the most common errors. The 3rd one is that profit is not your salary. Now I know you got into business, to have a dream and a life and so on. But in the initial stages, profit should be protected just like milk is for a baby, because the milk is what nourishes the baby. The cash is what nourishes the business. The baby is the business in this case. So if you hope to reap dividends in the future, you must be willing to give it what it needs now. Now, I'm not saying that you shouldn't make any money, that you shouldn't have a life, but what I'm saying is don't jump your lifestyle right away because you start seeing all kinds of money coming in. Because don't forget, remember what I said, right? All sales is not profit until you take the costs out. You should include something from your amount that you take out, whether it's a salary or however you figure it out. You should make sure that that's part of the calculation so that therefore you're actually calculating the profit, the correct profit from the sale of your items. So yes, you're there. You still have to make sure you can pay your bills, your personal bills. Therefore, you should take something out without a shadow of a doubt, but don't take it all. You need to reinvest it in the business because, hey, especially if you're in the food business, like I'm saying before, and you're manufacturing food, that machinery can wear out. You need the cash in order to be able to update your machinery or whatever else you need. Okay, so the 3 common mistakes that people make about profit is simply this. Number 1, sales is not profit. You must calculate all the costs. Number 2, markup is not profit margin. Make sure you calculate that properly. Otherwise, what you think you're making is not what you're making. And number 3, profit is not your salary. You need to make sure that there's enough money left in the business so that the business can become independent. In other words, live without you draining from it. If you take these 3 items to heart and you apply them in your business, only the Lord knows where you will be down the road. And if you have any questions, by all means, reach out to me because I really do want to show you the money. And one of the ways to do that is making sure that you know what true profit is. Have a great day. God bless. And I look forward to hearing from you soon. Ciao for now.